Forex Indicators Lesson 2, Forex RSI Stochastic Oscillator. The stochastic oscillator is a momentum indicator. Similar to the RSI, this indicator measures overbought and oversold conditions in the market. Typically, a reading above 80 level shows overbought conditions and below 20 oversold conditions. The indicator consists of two lines. The K line compares the latest closing price to the recent trading range. The D line is a signal line calculated by averaging the K line values. How can this be used to trade? Option 1, using the oversold and overbought readings in a range-bound market. In a range, we buy when the D line is rising out of the overbought area, and we sell when the D line is coming out of the oversold area. Option 2, using the line crossovers in a range-bound market. In a range, we buy when the K line crosses above the D line, and we sell when the K line crosses below the D line. Option 3, using the oversold and overbought conditions in a trending market. When the market is trending upwards, wait for a retracement lower and an oversold reading on the stochastic indicator. You buy when the D line is rising above the 20 level. When the market is trending down, wait for a retracement higher and an overbought reading on the stochastic indicator. Sell when the D line is falling below the 80 level. Remember, always stay with the trend. When the market is in an uptrend, look only at buying opportunities. And when the market is in a downtrend, look only for selling opportunities.